Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies PLTR stock, Sofi Technologies SOFI stock, Sensionics SENS stock, and NanoDimensions NNDM stock. Specifically for Palantir, we are going to be talking about how people are saying that they are going to retire off of just investing into Palantir stock by 2030. Then we're going to move over to Sofi Technologies because their management has just said that they are going to launch their fourth quarter earnings report for 2021 on March 1st of 2022 at 5 p.m. So I'll give you those details. Then we're going to talk about Sensionics SENS stock and how analysts have a great average price target and mean price target of $3.58, which is much larger than their current stock price, which could give investors fantastic upside opportunity if they want to invest into this company. And then lastly, we're going to talk about how NanoDimensions NNDM stock has trended up over 10% recently, why it's been trending up recently, and if this trend could continue well into the future. For more videos on Palantir, Sofi, Sensionics, and NanoDimension, remember to go and smash that like button right now, comment your thoughts down below on any of these stocks, subscribe if you are new, and without further ado, let's get right into today's video. Many people have been sending me this article about how they can literally retire off of Palantir's PLTR stock by 2030 due to the compounding annual growth rate of the stock of over 20%. And while this is possible, I want to show you the math behind this to determine if you could do this or even if you should do this. Remember, none of this is financial advice, this is just my opinion. For me, the amount of money you need in retirement, and I tell this to the people that I financially coach, is about $1.3 million or more, especially if we consider inflation over time. So if we want to reach $1.3 million of PLTR stock, we're going to have an initial investment right now of $25,000. Also, I want to go over Palantir's current stock price. Their current stock price is $12.75. The low-end price target by analysts is $15. The average price consensus among analysts that think that Palantir should be worth $21 by the end of the year, and the high-end price prediction for the stock is $25. It also has an overall rating by analysts as a hold. So currently, we're going to use the $12.75 for the PLTR stock because that's what the stock is trading at right now. So we're going to have to spend $25,000 on Palantir's PLTR shares at $12.75 each. We're also going to have to make a monthly contribution of $5,000 a month into the PLTR stock. So this would equate to roughly $60,000 every year into the PLTR stock on top of the initial investment right away of $25,000. The reason we are picking 9 years is because right now it's 2022 and I want to give this as much time as possible. So we are going to count the entire year of 2022 and the entire year of 2023. So instead of doing 8 years, we're actually going to give it 9 years to appreciate. And of course, that stock price appreciation is going to be compounding at an annual growth rate of 20% per year, and it's going to be compounded annually. So with these statistics, we can just press calculate over here, and it's going to give us that magic number of $1.3 million over the course of 9 years. However, I personally do not think this is very attainable for a regular person. An initial investment of $25,000 is a hefty amount on top of investing $5,000 a month, which is $60,000 a year, just to hit that number of $1.3 million at the end of 9 years. There are definitely other stocks that we could do this to. However, I personally would never do this in a single stock ever in my entire life. But what would this mean for the actual stock price and the overall market cap for the company? Well, the stock price would appreciate over 9 years at a compounding annual growth rate of 20% to around $65.79. So by 2030, the PLTR stock price is set to be $65.79 if it is growing at a 20% annual growth rate, which is absolutely fantastic. This would mean from the stock's current price of $12.75, this would have a multiple of increasing 5.16 times from the current stock price. This also means that we can take this number and multiply it by its current market cap of $26.23 billion to get their final market cap in 2030 of $135.34 billion. So although articles and videos like this are technically correct that it is possible, it's not very achievable for the regular person, and the risk management that it would take to actually go through with a plan like this is absolutely disgusting, and I personally would never do it. But with that being said, I am very bullish on Palantir overall. What I really like about Palantir is that it's a big data and analytics company, and data is truly the new oil. You have heard me say that multiple times on this channel. And according to the IDC, more than 80% of organizations' data and companies' data will be unstructured data by 2025. And this is a very large amount. This data needs to be siloed and interpreted by a platform very similar to Palantir's Foundry platform, which is their software as a service platform for commercial enterprises. It's no surprise that we see many institutions as well as enterprises in general using data to their overall advantage for both marketing and for their ability to sell products to their consumers. However, without a platform such as Palantir's Foundry platform, their management could spend years and millions, if not billions of dollars working on in-house solutions, but luckily, Palantir already created a platform that could highly benefit these institutions. This article is drawing a fantastic parallel between Palantir's Foundry platform and Amazon's AWS platform, so let's see what the article says about it. Amazon was clearly one of the first movers in this space, and their AWS or Amazon Web Services platform has been extremely competitive as well as successful. Amazon identified very early on that storing data was going to be a huge problem for multiple enterprises, and that's one of the reasons why Amazon created their AWS software to store data. And this makes perfect sense because as businesses continue to scale and grow their revenues as well as their customer base, that is going to generate more data, and that data needs to be stored somewhere. However, now that we have Amazon's AWS software, that data now needs to be interpreted, and this is how Palantir's Foundry platform comes in, and it's going to be very useful for a plethora of different companies. And this software can be utilized in basically any industry. And this is why some investors are looking at Palantir's very heavy sell-off lately as a fantastic buying opportunity, on top of how their management projects that their revenue growth will increase by 30% for the next 4 years, which is absolutely fantastic news. How Amazon really drove home their AWS platform and software was through the marketplace by introducing certifications that people can obtain to use their AWS software. And if you've noticed, Palantir literally did the exact same thing. In mid-January, and I even made a video about this, Palantir announced that they are going to be rolling out a certification program for their Foundry platform so people can be certified in this platform, which will help many institutions actually use this platform properly because now they are going to be certified and trained to do so. The company even noted in a recent press release that said, with its certification program, Palantir is accelerating and expanding the productization of its approach. So Palantir is literally taking an old playbook from Amazon and directly replicating it. They are using a blueprint that Amazon has already rolled out and that was extremely successful, and now Palantir is adopting that same strategy, which I think is pretty brilliant. This gives Palantir a huge opportunity because we already know this model and this blueprint works because it worked for Amazon. Now we just have to wait for it to work more for Palantir. By this, Palantir could establish themselves as one of the main companies for interpreting big data and analytics. Now let's head over and talk about Sofi Technologies. So Sofi is a fintech company and the ticker symbol is SOFI. They currently trade at $12.58 per share, which I think is a fantastic deal right now because the low-end price estimate according to analysts is $16 per share. The average price consensus among analysts is $20.55 per share, and the high-end price prediction is $30 per share. And overall, analysts say this stock is a clear buy rating right now, and I 100% agree with them. I am extremely bullish on Sofi. The reason why I'm so bullish is literally they are a leading fintech company that offers next-generation financial services on their overall platform, which is a one-stop shop for everything. You can get loans, refinances, mortgages, auto loans, student loans, credit cards, bank accounts, because they have their bank charter catalyst, and that's supposed to go through in February. So look forward to that catalyst coming up. And they are also set to have an earnings beat for their fourth quarter full year 2021 earnings report, which management says is going to be gone over on March 1st of 2022 at 5 p.m. So if you want to be a part of that earnings report or that call, and of course this link will be in the description box as well as all of these other sources because I always link my sources sources in the description if you all want to do more reading yourself. So with SoFi's fourth quarter earnings report coming up, as well as their full year 2021 report coming up on March 1st, along with their bank charter catalyst, which is supposed to go through 100% sometime in February, these are fantastic catalysts. Not to mention they also have the Super Bowl coming up, because the Super Bowl is being held at SoFi Stadium, which is going to give them great publicity, and they are going to host the Olympics in a SoFi Stadium in 2028. So a lot of fantastic things are going to happen for this company, both short-term and long-term. Which leads us to talking about Senseonics SENS stock. Senseonics Holdings, ticker symbol SENS stock, currently trades at $2.28. The low-end price target, according to analysts, is 80 cents, so we could see very big downside here. However, the average price consensus ranges anywhere from $3.57 to $3.58, while the high-end price target is $6 per share. Analysts are pretty split on this stock overall, and there are equal parts sell, hold, and buy ratings for this stock. However, this also depends on what analysts you look at. These are just the analysts that I have looked at, and they were overall 8 analysts that I ended up looking up. However, they do have a fantastic catalyst coming up. Supposedly in February, they are going to gain FDA approval for their 180-day glucose monitoring system, which is a continuous glucose monitoring system, and that is meant for people with diabetes. The reason for this is because Senseonics Holdings is a medical technology company that specializes and develops long-term implantable glucose monitoring systems, also known as CGMs. So overall, Senseonics stock has a fantastic mean price target of $3.58, which gives the stock fantastic upside from the current stock price, which is $2.28. However, other analysts are even more bullish on this stock that give it even better buy ratings. Overall, a few brokerage firms have already submitted their reports for the SENS stock, and they have been holding to it for quite a while. Specifically, I want to hone in on H.C. Wainwright, who has repeated and doubled down on their price target for SENS stock as a buy with a price target of $6 per share. And this was done back in August 19th of 2021, and they have since doubled down on that exact same price target. However, I want to weigh this with another price target from another institution that gives it a $3 price target, and that happened on April 1st of 2021. So we really have to weigh both of these. However, because the current stock price is both below $3 and $6, it might be a good time to invest into the stock, at least for a short-term trade, if you want to trade off of the catalyst momentum that could happen. Speaking about risky stocks, we have Nano Dimension's NNDM stock, which has surged around 10% so far, and investors are wondering why the stock price is randomly appreciating after a very long downtrend. And if you didn't know, Nano Dimension's NNDM stock has fallen from $17.89 all the way down to around $3.35. The current stock price for NNDM stock currently trades for around $3.50. The low-end price target is $10, as well as the average price consensus, and the high-end price target is also $10. And the reason for this is because only one analyst covers this stock. I really wish more analysts would cover Nano Dimension, because right now it looks like a fantastic buying opportunity because it's trading so low. So why has the stock price since appreciated around 10%? Well, two reasons for this. The first reason for this is that Nano Dimension's revenue growth rate has increased by 15.5% recently, and they brought in revenues of $3.51 million for the trailing 12 months, which is very impressive. Another reason for the stock price appreciation is that it is trading at a fantastic discount. It's trading well below its 50-day moving average of $5.38 and their 200-day moving average of $6.77. Lastly, my favorite reason for NNDM stock and why I personally think that the stock price has been appreciating lately is because investors may have actually caught on to how valuable this company is. Not too long ago, the stock price was trading around $3.03, and now the stock price is trading at $3.51. And although this doesn't seem like a lot of upside, it's actually a lot of upside. If we click here at $3.03 and we go all the way over here, the stock price has appreciated around 15%, almost 16%, and that's despite the recent decline lately, because it was $3.71 at one point, which represents a 23% incline. So this is fantastic, and the reason why I think this stock price appreciation is happening right now is because investors understand the market cap. Now, why is the market cap important? Well, the reason why the market cap for this particular company is very important right now is that they have more value on their balance sheet than what the company is actually worth right now. So currently, all of the stocks added up together at the price of $3.51 equates to around $873.4 million in total. Well, Nano Dimension has more than this amount on their balance sheet in cash, or at least cash equivalents. Nano Dimension has around $1.2 billion on their balance sheet. However, even if that recently declined to around $900 million, the stock is still trading below what the actual company is worth, because Nano Dimension is worth over $900 million, because that's just equating to the cash on their balance sheet. That's not including assets that they have, or intellectual property, or their acquisitions that they went through. This is literally only talking about short-term investments and cash, and the market cap is currently trading below that, which means this is a fantastic discount. But I want to hear your thoughts. What do you all think about Nano Dimension stock, Senseonics SENS stock, Sofi's SOFI stock, and Palantir's PLTR stock? As always, I'd love to hear your thoughts down below. Remember to subscribe if you are new, smash the like button if you haven't already, and I'll see you in the next YT video.